Let's start with crude, first of all. It's spiking up today. We saw Citi come out and say they think it's going to $90. It's over 80 now. Where do you think it's heading?
Well, I think it certainly could go to $90. It's what's happened is that in addition to everything else that's happening, people around the world, particularly in Europe and in China, are switching from some natural gas to switching to oil. And so suddenly you've had this upward pressure on oil demand that wasn't in the forecast a month ago because, people didn't see this energy crisis coming a month ago.
So let me pick up on that very specific question because I'm curious about it. How hard is it with a power plant to convert from natural gas to oil?
Well, most of them cannot do that, but dual-fired capacity is something that's built into some plants, and they've been there, usually there for years. And I don't think anybody particularly expected that they would be switching back to oil. But the price of natural gas, if it's landing in Europe today, is LNG is the equivalent of $200 a barrel. So oil is, by comparison, is certainly cheaper.
On the crude front alone, we've seen the Biden administration sometimes react, once encouraging OPEC Plus to increase production. And now there's talk at least about the petroleum reserve, the National Petroleum Reserve, although, as I understand it, they sort of suggested and walked it back. Are there things that the Biden administration could do to sort of take some of the sting out of the crude prices?
I think what they'll do is what they did in August. They'll go back to OPEC Plus and OPEC countries and say, can you put some more oil into the market? Because obviously anybody who's been around Washington for as long as Joe Biden knows that high gasoline prices are not good for incumbents. And so I think we're going to certainly be hearing more from the administration. They don't have a lot of tools because this is unlike other crises. This is not starting with oil. This is starting with natural gas, LNG supplies being very tight, coal being incredibly tight, and the wind not blowing in the North Sea, which produces a substantial part of Northern Europe's electricity. And then, of course, you have China that, in a sense, it's really started when China went into overdrive as the workshop of the world during COVID, and its demand really went up, and it ran into its coal ceiling, and it's pulled up natural gas prices, and that's what's radiated out to the entire world. And China's now rationing electricity effectively.
So, Dan, you point out a lot of this starts with natural gas. So let's go to natural gas. Could we have the kind of price spike in the United States that they're seeing over in Europe?
I don't think so. Natural gas prices have about doubled. They've doubled for two reasons here. One is inventories are low and people are looking to the winter. And two, because coal supplies are so tight, actually you have fuel switching from coal to people using natural gas to generate electricity. So that's what's really caused the doubling. And we have a lot of gas in this country, but we don't have quite enough pipelines to move it around.
Is that something that the Biden administration may have to take a look at? There's some irony to this, right? Because the Biden administration wants to cut back on fossil fuels, and right now we need more of them for the time being.
Well, I think there's going to be a big rethink, and certainly a rethink in Europe about the timing. I looked at this morning at natural gas production domestically in Europe. It's down 20%. So there's going to be a question of timing in terms of cutting back on conventional supplies when you don't really have the capacity there to replace it. And by the way, with electricity, you need reliable supplies. And when your wind can go, wind electricity can drop by 50 or 60%, you need an alternative, which is natural gas. So it will be striking, or at least interesting, to see the degree to which the administration looks again at the domestic energy supply situation and realizing that what's happened with the U.S. being self-sufficient in oil, self-sufficient in natural gas, gives us a lot of flexibility that other countries don't have.
Dan, we heard from Qatar today, which is pretty wealthy when it comes to natural gas, actually expressing some concern about the natural gas prices spiking so high. Is there a risk of demand destruction when it comes to natural gas?
Well, I think that's already happening because you have factories in Europe that are basically shutting down, furloughing workers because it's simply like a fertilizer plant which needs natural gas to make fertilizer. It's just too expensive to operate. So that's when you talk about demand destruction, you talk about factories not working, people using less energy. In China, they're even telling people, don't take the elevator if you're just going up 2 or 3 floors. So I think prices like this, there's always a backlash in the market in terms of a negative impact on demand.
Is Mr. Putin, the president of Russia, going to bail us out? He came out and sort of quieted the markets last week and saying, you know, we might be able to supply some more, although there might be a few conditions attached to that.
Well, one thing about Putin that people have observed over the years is that he knows a lot about the natural gas business. And when people meet him, they say he sounds almost like a CEO talking about gas. And so Russia has some extra capacity to put in, but they've been concerned that their inventories for the winter are also low. And so they've been, they've met their contracts, but they haven't put more gas into the market. They could put some more gas into the market. They need people wanting to buy it. But probably not a lot, but they could certainly, they could put some in. And, when Putin speaks, people do listen.
That's for sure. And Dan, one of the things we've seen over the last couple of weeks is some talk in Europe about the need to perhaps ration. We might actually have some curtailing of some of the power for heating over the winter. Is there a danger of that happening in the United States?
No, I don't think in the United States, but I don't think that's the case unless we have a bad, really bad winter. Then this shortage of coal and then the gas, but I don't think so. And I mean, the whole question now is, it all comes down to weather. Or if we have the markets are anticipating a cold winter. It was cold last year. That's one reason inventories are down. If it's cold, we're going to have more problems, and we'll see it more in prices. If we don't have a cold winter, then this will ease up. But certainly this ties into what you were talking about just before with Tyler Goodspeed. This feeds into inflation, and along with the supply chain disruptions, affects the kind of strong economic recovery we've seen. Expect China to slow down. We've just lowered our forecast for U.S. growth this year from 5.7 to 5.4%, and I suspect it will go lower as these problems persist.
You gave us an estimate on the crude side, could go up to 90 the way Citi's talking about. What on natural gas? Do you have an upside risk number on that?
You mean in the United States?
Yes, in the United States.
I think that we're probably in the $5, $6 range, unless something really bizarre happens for a while. And we used to be in that sort of $3 range. So it's definitely a doubling, and it feeds right to the economy, not only in terms of people's home heating, but in terms of industry. There's a lot of investment. There's hundreds of billions of dollars that have gone into investment into the United States because we have a competitive advantage in terms of gas prices over much of the rest of the world. We still do because the other prices are so much higher.